Hello, everyone. This is Jim Lucy, Editor-in-Chief for Electrical Wholesaling and Electrical Marketing, with episode number 105 of the Today's Electrical Economy podcast series sponsored by Champion Fiberglass. Champion began producing epoxy fiberglass conduit fittings in 1988, and in 1989 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent codes and specifications. Episode number 105 of the Today's Electrical Economy podcast series will offer our monthly update of the key leading economic indicators and also get into a new state spotlight on a state that is quietly becoming a very hot electrical market, Indiana. We'll also highlight 5 important weekly economic indicators: initial unemployment claims at the state level, rail freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. Our thanks again to the team at Champion Fiberglass for sponsoring this podcast series. In the week ending September 28th, the advanced figure for seasonally adjusted initial unemployment claims was 225,000. That is an increase of 6,000 from the previous week's revised level. The 4-week moving average was 224,250, and that is a decrease of 750 from the previous week's revised average. The U.S. unemployment rate dropped to 4.1% in September. In looking at the unemployment claim data, we find that 2 states had claims declining by over 1,000. They were Georgia, down 1,393, unemployment claims now at 3,826, and Florida, down 1,087, unemployment claims now at 5,367. Only 3 other states had declines, and they were comparatively minor. New Jersey's claims were down 563, Texas's claims were down 503, and Virginia down 488. Again, anything under 1,000 is fairly minor when you look at the overall data. There was only one state that had claims of over 1,000 increase, and that was Michigan. Its claims are now at 6,779. All other states were under 1,000 in claim increases. California was getting close to that 1,000 figure. It was up 954. Its unemployment claims are now at 38,904. Washington, Virginia, Iowa, all were fairly low in claims, as were Indiana, Texas, Pennsylvania, Oregon, and New Jersey, all well under that 1,000 claim difference figure. An interesting leading indicator for overall U.S. economy is freight rail traffic, and that's just because it's a measure of the amount of raw materials and finished goods being shipped by rail. The best source for this data is the American Association of Railroads, or AAR. It publishes this data weekly at www.aar.org. For the week, total U.S. weekly rail traffic was 507,537, and that is carloads and intermodal units. That's up 1.6% compared with the same week last year. Total combined U.S. rail traffic for the first 39 weeks of 2024 was 18,683,645 carloads and intermodal units. That is an increase of 3.3% compared to last year. When we take a look at the leading economic indicators a little further on in this podcast, you'll see that a lot of figures that are around that 2 to 3% increases. So fairly small increases, but definitely still mentionable. And following those small increases in total rail traffic, you'll see when you look at the individual freight categories that most categories are now in the green. This wasn't the case even last year, but right now many of them are looking pretty decent. 2 categories were over 10% year to date compared to this time last year: grain and petroleum products. Grain was up about 10.2%. Petroleum products up 10.4%. Coal remains the one category that is experiencing weekly declines, and it is down a fair amount over last year, down 14.6%. Non-metallic minerals showed a decline of 7%. Metallic ores and metals showed a decline of 3.3%, and total carloads were down 3.3%. If you track the oil market, you're probably familiar with the Baker Hughes rig count, which tracks the oil and gas rigs that are operating. This data is available by state, by basin, and nationally at www.rigcount.bakerhughes.com. In this slide, you'll get a sense of the largest oil and gas deposits in the United States. It gives you a good sense of just how many of the large oil plays are in Texas and Oklahoma, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. Although the Baker Hughes rig count did not maintain the mini surge in rigs that we talked about in the last podcast, the total number of operating oil and gas rigs is gaining ground on last year's marks and is now down only year over year 5.8%. The continued decline in gas rigs is responsible for a big chunk of that negative number, as gas rigs are still down 14.7%. Oil is compared to oil last year, oil rigs are down 3.6%. There's little change in the state or basin level data. The one number that stuck out to me is that with 306 rigs, the Permian Basin, Texas, the nation's largest oil basin, is now only 6 rigs from the number it was at last year. That is down to just cut its decline year over year to 1.9%. With everything that's going on in the Middle East right now, with tensions over Iran possibly shutting down the Straits of Hormuz, there's a lot of people watching the oil prices, and the oil prices right now have a bit of a spike, but nothing too crazy. Current price for West Texas Intermediate crude oil as of October the 7th is $75.62 per barrel, and that's just slightly under the average price for the year of right now, $77.97. Economists like to call copper pricing Dr. Copper because it's a leading economic indicator for future economic activity since copper is used in so many industries. The construction industry is among the leading markets for copper because of its use in wire and cable and copper plumbing pipe. Have you been watching copper prices? The current price of copper as of October the 4th is $4.58. It's seen a really substantial rise over the past 30 days, and it's up 50 cents per pound in just 1 month. If it continues on this track, if we're sitting down for this podcast next month, we'll be looking at prices again over $5 a pound. Tough to figure, tough to forecast copper for sure. There's always talk about China stockpiling copper. The United States gets about 50% of all their copper imported from overseas. Obviously, China is a big consumer, and you have a lot of the copper produced in South America. Occasionally, you have issues with strikes there. Different types of economic and environmental factors. So it's a very tough market to forecast. I always remember attending the Dodge construction forecast, and one of the economists that really devoted a lot of his time to forecasting copper called it the bane of his existence because it is so hard to figure out which way the prices are going. Right now, the prices are heading straight up. So let's see what happens over the next couple of weeks. I'm having some fun putting together these monthly leading economic indicators. Over the past couple of years, we've had the indicators that I mentioned earlier in the podcast each episode, and those are the weekly indicators. The podcast indicators that I'm putting together right now, and I'm trying to collect ones that do a good job of forecasting for the future. And these are on the monthly basis, so hopefully it'll give us a little bit better range of what's been going on. First one let's talk about, and this is from the National Electrical Manufacturers Association, or NEMA, the Electrical Industry Business Conditions Index. In August, and that basically is a survey of NEMA members, their executives there. And actually they're pretty bullish right now, both on a short-term and long-term basis. In August, NEMA's EBCI rose to 63.6%, and that's the highest score since February 2023. Anything over 50 shows that business conditions are improving. Future Conditions Index also really super high at 83.3. It did decrease, but it's still a very high number. Electrical manufacturers new order. This is from the Census Department. We had a very teeny tiny increase from July compared to June, up just 0.3%. That number is 4,464 million, and that is tracking down about 3% year over year. Electrical contractor employment, the August preliminary electrical contractor employment is 1.26 million. That's up just slightly over July, but it is up 3.6% over August 2023. And I've been watching contractor employment for a long time. Anytime you see that number over 1 million, it's pretty impressive, and we're in the middle of that right now. So these might be considered the good old days if we ever get a real slowdown in the electrical construction market. Data is not showing it right now. We did see some small declines in industrial employment. Both were down marginally on our short-term and long-term basis. Again, the industrial employment from the U.S. Census Bureau. Preliminary industrial data for September shows some minor slippage at 12.9 million, and that's down 0.4% from August and just a little bit down from September 2023. So nothing to worry about too much there. We talk a lot about from the American Institute of Architects, their consensus construction forecast. That's 9 economists that focus just on the construction market, and I like to look at that quite a bit. They're still looking for 7.4% growth in 2024, and that's overall in non-residential. And slowing down to a more moderate 2% pace in 2025. We've got another survey going out with our survey partners at Vertical Research, and that is for the third quarter. But the most recent that we have right now, 4.2% growth for this quarter. Very soon we'll see what the survey is predicting for the fourth quarter. One of the more interesting indicators that I found was the Dodge Momentum Index. And this just basically shows construction spending for non-resident buildings for going at least by a full year. And right now we're looking at for 2.9%. And this is just generally the total construction number, heavily slated toward non-residential construction. As you can see, both are looking pretty good. The value of new construction put in place, the numbers that we actual start construction spending. Construction spending during August was the estimated seasonal annual rate of 2,131.9 billion, and that's just a little below the July estimate. August figure is about 4.1% over 2023. If you want to take a look at a little bit longer period, in the first 8 months of 2024, construction spending was about 1,428.5 billion. That's 7.6% above last year's number of 1,327. So pretty impressive. Single-family building permits. We all know about the single-family market. It's just not, even with interest rates, it's having a hard time improving. We did see some decent improvement in August. The building permits, seasonally adjusted annual rate, that's this total, up 4.9% above the revised July total, still 6.5% below August 2023. The National Association of Home Builders, or NAHB, does a sponsored survey with Wells Fargo called their housing index, and that's showing both double decline there. They're both for short term and long term. The index fell 2 points down to 41 points. It's up in September, but it's still sitting 2 points below August 2023. The current sales expectations, traffic were up, however, September, and a 50-point mark indicates optimism. Also, one of the down that was fairly significantly down. This is again the manufacturing and industrial market, the S&P Global Manufacturing Purchasing Manager Index. That's a survey of purchasing managers looking down both long-term and short-term. In August, the number 47.9, down from 49.6, and again that's below the 50% mark that's showing growth. The latest reading signals some moderate deterioration in the health of the manufacturing sector. Okay, we're going to start trying something new here on the podcast. For each podcast, I'm going to be looking at a different state, looking at some of the economic factors in the electrical market that I will give you kind of a general sense of what's going on. I'm picking a state that we haven't talked a whole lot about over the past couple of years in this podcast, and that is Indiana. And the reason I picked Indiana to lead off here is the amount of the construction we're seeing in large project construction. A very large plant that was just announced last week was Eli Lilly announcing plans for a $4.5 billion factory in our R&D campus in Lebanon, Indiana. So that was one of the larger projects, but there's also some other pretty impressive projects we'll be getting to in just a little bit. Just one aside, so we're going to be talking each podcast. We'll be looking at the state spotlights. A lot of this information I pulled together and is available online from Electrical Marketing. It's only $99 a year for a subscription to it. I think you'll enjoy the numbers we pulled together on our state sales forecast, population growth, building permit growth, and also large construction projects. I try to pull together as many projects of $100 million or more in total contract value that I can. So just if you need that kind of data, you need it all in one place. At $99 an electric marketing subscription, you can get right to that. We're just in the process of updating all our numbers in that, but that's going to be available over the next couple of weeks. Alrighty, let's take a look at some of those big construction projects that I was mentioning. Biggest one, and this was announced a little time ago, back in April, the Amazon Web Services campus in New Carlisle, Indiana. A combination of data center projects, $11 billion. We mentioned the Eli Lilly project that was just announced about a week ago, $4.5 billion. Also, we have underway right now is a Indiana University downtown hospital, total construction value about $4.3 billion. We've got a Google data center in Fort Wayne, Indiana, and that is a $2 billion. In Terre Haute, Indiana, broke ground last year. We've got a $1.5 billion to build EV battery components. We've got a $1.2 billion prison that broke ground last year in Westville. Microsoft also building a data center, plans announced 2024, $1 billion in total value. And the FedEx facility at the Indianapolis International Airport, and according to Indianapolis Business Journal has been underway since 2016, which is a lot of traffic cones over the time, but completion expected next year. That's $1 billion. We've got a number of smaller projects, but still pretty sizable in the whole scheme of things. And particularly when you consider that electrical materials account for 10% of these, this is still some nice revenue coming in there. We've got a convention center expansion, the Hilton Hotel, the Indianapolis Convention Center. That's been underway for a couple of years. General Motors assembly plant, $632 million. Got a hotel and convention center project, downtown renovation type of work, and that's October 2023. The 16 Tech Innovation District in Indianapolis, mixed use, underway since 2018, and completion expected 2030. Also in South Bend, the Madison Lifestyle District redevelopment project, and that is proposed earlier this year, and that's about $330 million. Another hospital project in Fishers, Indiana, and Indiana University, Saxony Hospital Expansion Project, and that was reported in the Indianapolis Business Journal. And also in Fort Wayne, Indiana, broke ground in February, some school Northwest Allen County schools, and another hospital project. This was announced last year, 2023, $125 million project. While this isn't a construction project, one thing that always kind of fascinates me there, that Elkhart, Indiana, is known as not necessarily for one of these construction projects, but it is the biggest manufacturer of RV vehicles. And what I just learned today when I was researching this podcast, also musical instruments. So a little cluster of some pretty big businesses there, making those two important segments of the U.S. economy. When you look at the total sales potential that we're estimating for Indiana, basically as a state, we're looking at about $3.9 billion in sales. It's about, when you look at comparative for the entire U.S., it's about 2.7% of the total U.S. electrical market as far as we can figure. As you can imagine, it's the largest city in Indiana, and in the Metropolitan Statistical Area, or MSA, that covers Indianapolis, the state's capital, the Indianapolis Carmel Anderson MSA, almost 30% of the state's total sales change that we're estimating, and these numbers were through July, 4.7% increase. We estimate in Indianapolis that there's over 8,600 contractors being employed there. A bit of an increase, 477 increase. As an industrial market there's over employment there, pretty sizable, really. 100,100, and over the past year they've added 1,733. For those of you who listen to the podcast, I talk about how we come up with these estimates, and these numbers that I'm going through here are important because we use a sales per employee multiplier that we developed at Electrical Wholesaling Magazine a long time ago, and we have some other ways to come up with a total market, but we look at the trends in employment to come up with a market potential there. So that's when you think of it, it had a pretty good size sales change in Indianapolis. Nothing else really huge, but you can see the other sizable markets in Gary, Fort Wayne, Elkhart, all under 10%. But it's an interesting state when I look at all the different construction projects that have come aboard lately, and there's so much stuff right around the Indianapolis market. Very, very vibrant economy from all sides. Another indicator for future economic growth on the local level are single-family building permits in particular. And as you can see, we track that to the numbers from the Bureau of Census, and these numbers I have through August, I believe, in Indianapolis. So so far this year, there's over 6,386 single-family permits that were pulled, and that is up over 1,700. So pretty sizable, pretty sizable for sure. On the looking at the permit level for 5 units or more, about 1,000 permits. It's down a fair amount. Multifamily, 5 units or more, very cyclical. It's up or down pretty much. But I tend to look at the single family a bit more just to kind of get a general sense, because it's a little steadier. I mean, home building market is very up or down, as we've always said, but it's still something to look at. No other market really looking as far as any other big increases in Indiana on the single family building permit level. And the last economic indicator we'll talk about for Indiana in this podcast is population growth. As a whole, the state's growing right about the U.S. national rate of about 1% over the past 3 years. Over the past year, the state Indianapolis with MSA attracted a pretty good size of some growth there. 17,807 people moved into the market, that more than left it. And the total, and what number I always like to look at, the new residents per day. It's kind of a very tangible look at how many are people moving in or moving out. And for Indianapolis, it's right at about 29.8 new residents per day. That's pretty healthy. I mean, you see some, when you look at overall in the United States, when you see residents moving in at a rate of 40 or 50 per day, that's some of the highest ones. So very healthy number there for Indianapolis. So that was pretty good. There are a couple of markets in the state are losing over the past year. Have lost some population. The Elkhart, Goshen well, we talked a little bit about that before. Is net migration. That's the difference between people who have moved in or out. Net migration was about 1,450, was down. So that is, that was a fairly sizable number there. And also on a smaller level, Michigan City, LaPorte, and that's a MSA that goes over very close to the Michigan area there, and Bloomington also down just a fairly small amount. But but overall, pretty healthy number, for a state there, and it's particularly impressive when you upper Midwest types of states. So unfortunately, you see a lot of these states that are losing population, but Indiana has shown some fairly solid growth there. So that's something to consider. That wraps up our podcast for today, and thanks again to the folks at Champion Fiberglass for sponsoring today's Electrical Economy podcast series. And as I mentioned earlier, if you're looking at any of these stats and need to look at the whole country, the stats that's available at Electrical Marketing Newsletter, I think that's a pretty good bargain for just $99. Our next presentation will be October the 21st. So until then, be happy, be healthy. Look forward to talking with you then.